Thank you very much. Yeah, so good morning, everyone. So this morning's event will be a joint. So Megan and I normally every Friday cut what we dubbed Weekly Livestock Update, just to look at what's been happening in markets over the week. So we're actually going to, I think, do this live.
We are. We are live on the air right now as well.
And so you'll see Megan moderate. So she'll ask me lots of questions, probably trying to trip me up along the way. But that's the plan for this morning.
So just a couple of things. Welcome to what we call the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. Typically we do this on Friday afternoon, but since I'm here and Scott's here, we thought we could do this live today. We really are going to get into what we typically do in our weekly Friday update, but we get a little bit of an extended version today and an opportunity for you to ask us questions, or you, if you want to trip up Scott, can ask him questions as well. So let's kick things off this morning and recap what happened this week in the markets.
Yeah, if we start on the cattle side as normal, Megan, you know, it was a good week for cattle markets. We saw cash cattle that traded higher this week. We ended up with some $1.40 fed cattle this week, so very good news in terms of higher cattle prices. I remind us we've been on an upward trend the last several weeks. You know, you look at the feeder cattle markets around the country. Feeder calves were actually quite strong this week, up 4 to 8. Feeder cattle generally strong, not as up as much as what we saw on the calf side. On the futures side, the February live cattle futures contract was down $2.10, and the January feeder cattle futures contract down $3.37. I think we were seeing some general economic downturn affecting futures markets as well. This week, the choice box beef price was down a little more than $6, and we've seen that box beef price be pretty high all year long, yet now we're only talking about roughly being $33 above where we were a year ago at this time. On the hog side, cash barrows and gilts were down $1 this week. When we look at the February lean hog futures contract, it was basically unchanged this week. The pork cutout value gained about $1.20. On Megan's favorite piece of that cutout value, what was higher belly prices?
You know, I have a house full of my husband and then my two little guys, so bacon is definitely a favorite. One of my twins every Saturday morning is like, "Mommy, it's time for eggs and bacon," and that's that's where we go, and it's getting a little bit more expensive to put bacon on the table.
It certainly is, and again, we certainly want some higher hog prices,
yes.
I will say, but it does come with what's been traditionally now higher belly prices as we look ahead.
It's been a really interesting year as you look at what's been going on with cash cattle prices, and on the opposite side of things, cash hog prices, and it seems like they've been going in kind of a reverse order. We saw cattle prices dip down earlier and hog prices shoot higher. And then in recent months, we've seen that hog price top off and come back down, and cattle prices start their uptick. What are some things that we need to think about as livestock producers as we're watching what these markets are doing?
Yeah, so I think on the cattle side, number one, the thing we're going to be watching is what happens from a drought perspective. The dry weather in the west and in the northern plains has certainly been important to where cattle prices have gone. To me, part of the reason why we're seeing a lot more strength in cattle prices as we've seen the last few weeks. I keep saying I think we can get really bullish cattle because cattle supplies are going to continue to tighten. If you look at what we've been doing in terms of cattle placements and cattle on feed, all of 2021 we've been at or even in some cases slightly above year-ago levels. That's going to change. I think we've pulled calves out of those dry areas in the feed yards sooner than normal, and so I think as we get further into 2022, we could see continued strength in cattle prices. I don't want to be too bullish for us, but that weather side's going to drive, and all of a sudden what's been large packer margins, we've had lots of conversation, and maybe there'll be more questions about that going forward, are going to narrow as they have to bid a lot harder for what's going to be a more limited supply of cattle. On the hog side of the equation, I still can get fairly optimistic. It looks like we're going to be down in pork supplies for at least the first couple of quarters of 2022. 2022. The last Hogs and Pigs report that we got was fairly bullish in terms of inventory. And as feed costs continue to stay high, I think it's an industry that on the supply side does stay in check in terms of not a lot of growth. Yet markets have been a little lower as we got a big bounce up after the report. It's just been drifting lower ever since. I think a little bit of the trade side there might be hurting us as places like China continue to take less pork from us this year than they did in 2021.
And we have a quarterly Hogs and Pigs report coming out here in a couple of weeks. It'll be the last one of this year. What are some things that you're watching after we take into consideration what we saw in the last report and as we start to position ourselves into 2022?
Yeah, so it's going to be overall breeding inventory that's going to matter. How many sows do we really have out there? I think that's important to where we go with the next Hogs and Pigs report. But even to South Farrow, you looked at the last report, the first quarter of 2022 out of the last report would have suggested an increase in South Farrow. Does that continue and we see the next report? If it does, then maybe by the time we get to the end of 22, we get a little more concerned about overall hog supplies, and then what kind of prices do we have relative to, again, what will be a slaughter capacity issue potentially.
You brought up China, and in 2020, that was kind of the big story on the hog side of things. 2019, 2020 in general. We've seen a pullback in China as they work to rebuild their hog herd following African swine fever. And we had that trade, can I call it a kerfluffle, with Mexico and US, which is now USMCA. But we're starting to see an uptick in places like Mexico taking more pork. How does that whole global trade picture really shape the hog picture when it comes to prices?
Yeah, so I think it is important. Thank goodness we got some growth in Mexico here in 2021. If you back up a little bit, so let's go to 2020 for a minute. Another 1 billion pounds of pork left the United States. It was by and large destined for China. I often will say, you'll be right, and I say right 70% of the time if you answer China to any kind of trade discussion. I don't care what commodity it is, they're very important. Yet when you look at 2021, as their hog herd has begun to rebuild, their interest in U.S. pork has waned after what was such a strong increase in 2020. And so having other countries like Mexico jump in, and particularly for the ham side of the equation, it's been really good. I will keep saying that's the long-term goal here. So more international trade. If we're going to grow production of, I don't care, beef or pork in this case, we need more consumption in the rest of the world. It's where incomes are going to grow the fastest going forward and where population is going to grow the fastest. If we're only going to talk about increasing domestic markets, we often all know what happens when we increase supplies of beef and pork in this marketplace. It leads to lower prices for us.
When we look at that, we talk about, it's kind of like sports. Everybody's talking about the big games, the big, the number ones, the big conferences, but there's also those little guys too. Do those little guys add up to be a shocker or to be maybe an upset to play in that big, think about like a Cincinnati when we talk about football, to be a disruptor or a game changer in the big picture?
So oftentimes I think we talk about risk here, right? When you have one country, so if we depend on China, let's go to soybeans for a minute. 60% of what we were exporting was all destined for China. When you depend on one country for such a large percentage, then all of a sudden if you have some issue with that country or they throw additional tariffs on like the Chinese did in 2018 on soybeans, it wreaks havoc with our trade. So from a risk mitigation standpoint, I think sometimes having a broader set of countries trading can be very helpful to reduce the downside risk associated with trade. So although we keep saying, yes, we need to export more products, for me it's very much building all of the countries that could potentially take products so that you don't depend on just one. You can mitigate some risk that way, and I will give both our pork and beef industries some credit for market development activities. We want to see them continue to do that market development activity going forward. It's important, again, to I want the next market, because unfortunately, we have to keep growing, right? It's never good enough, right? So when the Chinese took another 1 billion pounds of pork, that was for 2020. Now, what do we do in 2021? What do we do in 2022? If we want to keep growing those markets, we have to find new opportunities.
I think about what the work organizations or agencies like the U.S. Meat Export Federation do and where checkoff dollars go to play in that conversation, which is great on the global front. But let's talk about domestic demand for a second. Let's turn the ship just a little bit. Jobs report came out this week, and as we take a look at that, that plays a big role in what we talk about in terms of domestic demand.
Yeah, that's right. So we did get a jobs report out yesterday. We were anticipating more than 500,000 new jobs out of that report, and we did not get it. We got about 265 out of the report yesterday, so fewer new jobs created than anticipated. For me, that's all about then what's the income look like for us to consume beef and pork products. So we've been back and forth. We've had good news at times in terms of that general economy, but then also some less positive news. So yesterday was another less positive, which to me is, again, long term. So yes, we talk about the growth in those international markets. We need the base here. The demand has been incredibly strong in this country for both beef and pork products as we've looked for the last couple of years. We don't need general economic slowdown creating an opportunity for consumers to back away in terms of that demand growth. So not the best report we would have gotten, but yes, we continue to have growth. I just expect a lot more volatility will continue as we go forward in terms of domestic consumption.
I think it's a really interesting picture to look at the global trade picture and what we rely on for exports for beef and pork, both. But if those back off, we're going to push a whole lot of product onto the domestic market, and that really can disrupt that price picture.
Yeah, so we can have the discussion about African swine fever coming to the United States, all right? So what we know is we're shipping 20-25% of what we're producing in terms of pork outside the United States. If we have ASF here, that likely is stopped immediately. So that 20 to 25% has to go on to domestic markets in some fashion, and it's going to have spillover effects. So it'll affect cattle as well. All of a sudden we have more total meat supplies to deal with. It is one of those risks that we can continue to talk about. Let's hope it never happens, Megan, but ASF keeps getting closer to us as we look ahead. And so for me, again, on the cattle side, or beef side in particular, China's been so important this year. When you think about what China's been doing, 3,500 metric tons a week of beef going to China, and that's muscle cuts of beef. We need that growth to continue, and the Chinese could do that. 1.4 billion people, 2,500, 3,500 metric tons is not very much beef. I think they've gotten more of a taste for U.S. beef, and there's certainly a segment that's going to be interested. But if that were to back away, all of a sudden then we become a lot less optimistic. If you look at who's been importing beef generally the last 4 or 5 years, we might go to our old trusty Japan, South Korea as maybe the starting point, but they've frankly been relatively flat the last 5 years. It's all been growth in China that's mattered.
Which is really interesting when you throw in the coronavirus pandemic, because we need not just our economies to stay positive and to be on an upward trend. We need China to still stay open for business, to increase that family household income, because when our incomes go up, what do?
We certainly eat more, right? I do my fair share of that.
And that plays a picture in the whole demand picture for beef, and I think that's so interesting to watch what's going on with China and the beef trade since it's reopened back up.
Yes, it's been one of the positives, right? So besides what's been strong domestic demand, the fact that we've seen increase in exports of beef out of this country to China, it's a really good sign that could continue here for a few years, I think.
Let's talk Restaurant Performance Index, right? That also came out this week, and that comes back to that whole domestic demand conversation as well.
Yeah, and I think When I think restaurant performance index, it's certainly linked to what happens to cattle markets in particular. The stronger that restaurant performance index is, we tend to consume a lot of beef away from home. And so we did get a report out for November that showed stronger restaurant performance index after you and I have talked about for the last 3 months or so what's been a declining restaurant performance index. So it is nice to see the turnaround. I think we got a 1.5 gain in the overall index, so a lot more optimism. So maybe some good news despite a jobs number that wasn't quite where we wanted, so a mixed bag from the demand side. I will say it's important, I think, to continue to watch what's happening with COVID-19. We've had a lot of discussion this week of new variant.
Yes.
That's going to be problematic, and I keep saying, don't forget, Kirksville, Missouri is not average in terms of the reaction to COVID-19. In many ways, I think we're much more closer back to normal. Yet you look on the coast of this country, still, I think, a lot more lockdown, if you will, relative to how we sit here. And to me, that has implications, and actually maybe positive ones. If those coasts continue to be more open across time, more opportunities to eat out, I think that's all good for the beef industry, by the way.
Does that also maybe play a role in, as if you're thinking about making some Christmas purchases, gifting? Should we be gifting gift certificates to local restaurants to help us boost not only our local economies, but then maybe increase in beef consumption, increase in restaurant performance index as well?
Yeah, I think that's certainly an opportunity. We just have to continue to grow that domestic demand side. I will say it's been so strong in terms of domestic demand growth. It's been a really positive piece of the puzzle that we have. I do remember days when domestic beef and pork consumption were not strong from a demand standpoint. We have cyclical behavior there. So we need to do everything we can to continue to push more positive demand. But to me, it's that away from home component that's going to be most important.
And I want to talk about that just kind of in an offshoot. How has our ability to, the most overused word of the last 2 years is pivot. I will graciously admit that. But the fact that our restaurants were able to shift and maybe make at home or utilize delivery services, so on and so forth, has that kind of saved some of our domestic demand over the last 2 years?
Yeah, so I think it's made a big difference in terms of what we've done. When you think about the economy that basically ground to a halt back in March, I sometimes say for everyone to go back to that period of time, and what were you thinking at the time? So there's so much uncertainty and unknown. Where we sit today, we need to go back to that from a restaurant perspective in particular, because folks have figured out how to do delivery. People have figured out how to do carry out, curbside. I go, even if we were to talk about a huge increase in a pandemic that resulted in us shutting or shuttering things, the restaurant the restaurant industry is at a very different place. And I think it actually is another risk mitigation strategy that maybe we didn't think about early on, but going through another pandemic like we came through in spring of 20 will mean very different things. So we should not think we can repeat exactly what transpired. I think we learned how to provide more flexibility and continue to provide consumers an opportunity to eat away from home, even though it might have been curbside.
And that was important for our nation's beef and pork producers as well, because it still allowed product to move.
Yes, and when you think, and I'll go back to cattle here for a minute, early on in that pandemic lockdown, the cuts that hurt the worst were our highest quality cuts, because those were being delivered to restaurants when restaurants had no customers. All of a sudden we had a backup of those high quality cuts. Now that we, I think, have ways to deliver those even if we can't do in-restaurant consumption, it provides us a much better risk mitigation strategy than we had back in March of 2020.
I think about the lamb industry. Really, and I promise you no sheep questions today, but in a big picture, I look at our home specifically. We never cook lamb at home. But when there was lamb that was reasonably priced at the Costco or the grocery store or whatever, wherever you were going, my husband's like, hey, let me try my hand at this, and got creative, and now it's one of our favorites to put on the plate, and my boys love it.
So I think the point is good about we've opened up new opportunities for consumption that maybe hadn't happened in the past. I will plead completely guilty to being in the deepest ruts of anybody in the world. All right, how I run my day is pretty similar every day. Yet all of a sudden, with the global pandemic really changing things, I think it opened up some new opportunities. And I think even on the beef side, we learned about how to fix beef products that maybe many consumers, especially those in more urban areas, never really thought about in the past. That hasn't really gone away, as even though we've seen a recovery and no longer shut down in many cases, it has changed the consumption outlook to me as we look ahead.
Let's talk farm income. Also out from USDA this week, correct?
That's correct. So a new estimate for 2021. That's nothing but positive. All right. So USDA last gave us a farm income estimate for 21 back in September of this year. They changed here in December. I would have assumed, because of lower crop prices and higher expenses, we all know what's been happening on the expense side, USDA might actually lower their estimate of 2021 farm income, but they increased it. All right, so receipts for livestock in particular show up here. So 2021 cash receipts for livestock up nearly $30 billion from 2020. So it's a nice change relative to where we were last year. Yes, expenses have gone up, and I think that's the side that most worries me from an overall farm income perspective. Crop receipts continue to be strong as well, up about $35 billion from where we were in 2020. The other piece that tends to pull things down here a little bit, besides higher expenses, is less government payments. We came through 2020 with some of the largest payments in a long time as we worked on the pandemic. What was a $46 billion government payments, roughly cut in half, not quite in half, but much lower in 2021. But it's nice to see what is going to be a good year for 2021. USDA saying over $115 billion in terms of net farm income. I again would back people up to where we were in early 2020 and say, who would have thought we would have been as resilient as we were? Ag has done, frankly, amazingly well in the face of this pandemic.
As we talk about that, there is great opportunity, but I think that also means that we need to have a risk management conversation. So with greater opportunity comes greater risk. Let's talk about the potential for rising input prices and how do producers, both on the cattle and hog side of things, take in all of that information and finish up their plans for 2022.
Yeah, so you ask a really good question, and I'll say, given where fertilizer prices are today, one has to wonder about how many acres of corn we might get in the ground next spring. That maybe is my biggest risk that I see right now. I've seen a lot of different estimates of corn acres already for 2022 at this point in time, but I know that $1,400 a ton anhydrous ammonia or greater certainly makes folks think hard about corn versus soybeans. I will say it's too early at this point to make too many acreage expectations for next year, but I will say the following. If we're going to plant 90 million acres of corn or less, feed costs are going to be an issue in 2022, just given what I see today. If we end up planting 93, 94 million acres of corn or more, then I'm less concerned about feed costs as we get further into 2022. My crystal ball's cracked looking forward. All right, I'll say that all the time.
What about your magic 8 ball?
Yeah. Well, we can look at that. All right. So maybe the phone will tell me something this morning, but I will say I think that we need to do risk management. We need to decide what our expenses look like and what we want to cover. I often say doing nothing in terms of locking prices in, feed costs or output prices, is a risk management strategy. It may not be a very good one. So
I'm going to bring a sports analogy back in. We talk about baseball and batting averages. It's really great to have a high batting average, but that doesn't always necessarily mean there's a whole lot of triples and home runs, and a lot of times that's a lot of singles and doubles.
yeah, that's right. And again, if you're doing risk management because you're trying to hit the market high, you're going to be disappointed. If you're using some of the tools available to us to offset risk because you truly are in this risk mitigation strategy, it's all good. I will keep saying a lot of volatility in these markets. So I'm not sure I want to lock in input prices and not think about the output side at the same time. You don't want half of that necessarily locked in. It could create some issues for you. We've seen this in the past. So think about the overall margin, if you will, that you're trying to protect. I think that's one of the important pieces of the puzzle here.
Let's talk about drought, or let's take a bigger picture. Let's talk Mother Nature. And if we're talking risk management, the one thing we can't control is the weather. So we've seen drought conditions in the west. I'm in the eastern part of the Corn Belt that saw a pretty wet, rainy harvest, and I know far too many farmers who are still trying to get crops out of the ground as we talk here December 4th. How does that play into the picture again in different types of crops? Maybe hay, forages, those types of things.
Yeah, so I sometimes say, you look back at what we did in 2020. We had drought occur earlier in some parts of the country than ever before, so we never saw any real hay and pasture growth in some parts of the country. I think northern plains, Montana, North Dakota, South Dakota, probably being the most important. And so what happens as we go to 2022? Do we get a normal weather event happening there? If we do, I see cattle trying to move back into that country. Cattle that have tended to move away from that country, or out of that country, coming back if there's better forage supplies. We're just way too early to have that conversation as well, but it matters a lot to cattle markets. So I sometimes say we sold $3 calves in 2014 because of the drought of 2012. We really tightened up cattle supplies. All right, so we've already gotten ourselves in a situation where the next couple of years are going to get tighter in terms of calf supplies because of the dry weather of 2012. And the West has probably been drier than the northern plains, but we got a lot more cattle that we need to worry about in the northern plains than we tend to have, more in the West. But to me, this is going to drive cattle markets here for a while. Now, can we have negative things that offset the positives of this dry weather? Absolutely. But again, I think we're beginning just to see the tip of the iceberg in terms of what could be some higher cattle prices.
And we talked about that too, when we talk about cattle moving or being placed earlier, or what's happening to the cattle that were sold off in the Dakotas, Montana area in 2021. Where are they? So is that the January report that comes out where we maybe see what's left or where things are located, and how does that set the stage for the rest of 2022?
Yeah, so I do think we could see some states that had ample forage supplies that are holding cattle that are ultimately destined to go back into some of those dry areas. What we get out of USDA's January 1 report at the end of January, I'm not sure we'll capture all of those things, but again, I will say we'll move cattle back into some of those, and it only tightens things up even more, Megan. If you think about cattle on feed right now, we've got roughly 39% of all cattle on feed that are heifers. So we've sent a lot of females to the feed yard earlier than normal, and so we're not growing the overall cow herd. And if all of a sudden we start to see the opportunity for some of those dry weather parts of the country to come back, I think it'll pull on heifers as well as we look ahead.
I hope you didn't think you were going to get out of here today without us talking about cattle market legislation.
It has been one of the big topics of the year, that's for sure.
Maybe just a little bit. So we've seen some interesting conversations lately. Earlier this year, we had the Chuck Grassley 5014 bill. Then we saw Deb Fisher's more regionalized bill that was introduced. And then after much discussion, we saw a compromise bill come out that a lot of cattle groups have been in support of, and some not as much. And then in the last couple of weeks, we saw vegan Senator Cory Booker of New Jersey and Ro Khanna, Representative Ro Khanna out of California, introduce their bill. As we take a look at these pieces of legislation, let's kind of just talk broadly about what the potential implications are with these types of bills, because there's a lot to unpack in what has to happen in the next few months.
Yeah, so I always like to start by reminding us that better price discovery, all right, which is more negotiated cash trade of cattle, is nothing but probably good for us. We want to make sure that we are, in fact, finding that supply and demand equilibrium appropriately. And if we don't cash trade very many cattle, there's more opportunity for us not to be finding that true equilibrium price. Sometimes I say better price discovery might lead to lower cattle prices. Other times it might lead to higher cattle prices. I think we look at packer margins and the things that have been going on the last several months, and we think that packers maybe have the upper hand in some cases. I will say as cattle supplies decline, I think that'll help take care of some of that. But we want to be careful as we think about mandating minimum cash trade. As much as it might be good in some parts of time, I think there's always some unintended consequences that could crop up from some of these different types of legislation. So we have to find some balance here. And so maybe there is some minimum that should be required, but we want to think very carefully, because once we mandate that, we don't want to find ourselves in a situation where we don't like it. There is some reason to think that we want to allow some of these alternative marketing arrangements to continue, because when you think about where we're getting some value there, we're getting some value out of the higher quality beef. We don't want our producers to lose out on that opportunity, by the way. And so some of those formulas, I think, actually help. I say all that going, there is no simple single answer, right? So we've certainly seen packer margins that have been extremely wide of late. I've had a lot of folks come up to me and for sure suggest packers are not playing very fairly. I will just turn around to say, I think as we get into 2022 and early 2023, that whole thing is going to shift to be much more favorable to cattle producers, and maybe we find ourselves back in that 2013, 2014 period of time. How do we want legislation to work if that's where we're headed?
There's definitely not an easy answer to this. I think there's no black and white. There's a whole lot of gray area. When we look at what the cattle industry has done, we are seeing higher quality cattle, more higher quality cattle than we have ever seen before. And that is, without a doubt, can be attributed to producers' investments in genetics, and genetics as a risk management tool. How do we make sure that producers don't lose out on those premiums for those higher quality cattle that they've worked so hard to produce?
So I think it's been an industry where we've had so many independent pieces of the puzzle, and so the connection from consumers all the way back to producers gets hard in this market. We like to be independent in terms of cattlemen and women in this country, yet we also want to be able to take advantage of the quality of animal that we have. I will say all the time, the number one thing we've done in the cattle industry has been put in front of consumers products that they really want. And that has a lot to do with taste. And that has a lot to do with using better genetics to put a piece of beef in front of consumers that they really want. That's been the win. You don't want to lose that connection. Now, maybe it's not been as strong as it needs to be, and some will say I'm not getting paid for that genetic improvement I'm making in my herd, but for me, we want to make sure that we allow those opportunities, and how do we do it in a coordinated fashion, yet allow us to have the independence that we've been so used to in this industry? That's what we're going to struggle with.
sorry, I didn't mean to cut you off. Is that where those contract libraries, those AMAs, the ability to know what those agreements look like come into play and maybe give our independent cattle producers a little bit more leverage or the ability to have that conversation?
So I think it does. So in terms of things that are in the legislation, one, making sure we know what kind of contracts are out there are important. I will say USDA has already made some changes. When you look at what the Agricultural Marketing Service provides today, we now get a report on the distribution of cattle prices being paid by type of delivery or type of contract that we have. And so we're beginning to see more information. I encourage everyone to go look at some of that information, right? So there are winners and losers in that, by the way. Sometimes the distribution from low prices to high prices in a given day can be relatively wide, but there's more information available today than there was just a few weeks ago, frankly, as USDA has been trying to respond. Sometimes I go, that becomes information overload at the same time, so trying to find the balance between how much data do I want to look at versus making sure that we have fair cattle markets, I guess is the way I might talk about it. It's really important.
Is the educational component to that, I mean, you brought up information overload. It is great to have data, reports, things to evaluate. Do we need to also take some time to invest in producer education so they know how to use those contract libraries and that information that USDA and AMS is providing to help them better market their cattle and to give them an opportunity to market better?
Yeah, so I think there is opportunity for that activity to occur. I will say I'm still trying to get my arms around some of the additional data that's available today. It's a treasure trove of information at times, and trying to figure out how to succinctly look at it to make decisions. I think there is something to be said for more education. At the same time, I will say, you go to AMS's website, you can download all kinds of reports today. So sometimes I get the, hey, this is happening, and yet I'm like, yeah, but if I look at the AMS data, that's not what I see. And so I think there is a lot of information that now isn't getting incorporated because it's so much, and so this idea of how do you take all of the information we get on a daily basis out of mandatory livestock reporting and condense it in a way that is digestible is going to be something that we all have to face for many months into the future.
You brought up another wonderful point. Livestock mandatory reporting, LMR, was included in the continuing resolution that Congress passed Thursday evening, late, which prevented the government from shutting down. So that pushes that conversation into February. I know Senator Chuck Grassley of Iowa really wanted this compromise legislation tied in with a full reauthorization of LMR, which should happen, I should say, every 5 years, but it has not recently. How does that change the conversation or delay the conversation about this cattle market legislation that's been posed and proposed, in making sure LMR receives the attention it needs?
So it's a really good question. I wish I knew the exact answer going forward, but I will say the following. So you need a vehicle to get this legislation to the finish line. And I think Senator Grassley has very definitely figured out that perhaps LMR reauthorization is the right stick, if you will, to try to get some new legislation in place. If LMR is extended longer term, I think it gets harder to find that next place. Now, I sometimes say, we're going to see Congress trying to debate the 2023 Farm Bill here before long. That might be the next opportunity to all of a sudden start talking about a competition title in that Farm Bill. It won't be the first time we've debated a competition title. You have to go back to the early 2000s. But Senator Harkin, who was chair of Senate Ag Committee at the time, did have that discussion along the way. So I will say the following: we don't want to lose mandatory livestock reporting. So we don't want there to be such a cliff out there that if we don't get this new legislation, LMR goes away. That's less information, and I know who loses in that. It will be producers who I think have we'll end up with less information and we'll be more uncertain about what kind of prices they have. But I do think now that this is going to be the next period, right? So we get to the end of February and the current CR is going to expire along with it LMR. What do we do? Do we do a 1 year? Do we do a 5 year? Do we end up not doing anything? I mean, all those things are on the table, I think, as we look ahead.
Oh, and by the way, it's a midterm election year.
I think some folks are going to be very interested in running for election. You know, so to the politics of all of this, to the 2023 Farm Bill, I will say, you know, if you think you're going to maintain control of the House as Democrats in this midterm election, you're probably okay waiting until 2023 to have the Farm Bill. If you're the Republicans and you think you're going to gain enough seats to take control, you also are going to push that discussion out further. So I'm not sure we get too excited about much ag legislation in 2022. We're going to be much more excited about who's going to take control of some of those of the House. And you know, you listen to folks, it looks like the Republicans right now stand a good chance of maybe taking over on the House side. For me, the Senate side is much more up in the air in terms of whether we have Democrats or Republicans in control.
Scott, you and I have had a great conversation this morning, and I've been able to ask you all of my questions. But let's give you guys an opportunity as well, and you'll have to forgive me if you want to ask a question, raise your hand or shout it out, and then I can repeat it back so we can also, everybody else can hear it as well. Are there any questions from you all? Don't be shy. Is everybody going to be shy? No, go ahead. Go ahead, sir. So the question again is the addition of packing capacity and the impact on fed cattle supply and prices as well.
Yeah, so to me, this is all really positive for producers. When you see the capacity that's coming on, right, so I talk about a couple of things here. So one's the plant in North Platte, Nebraska, that ought to be coming on. I believe maybe some dirt's moved. I haven't heard much recently there. But all of a sudden, you're talking about a plant of significant size that's going to need cattle. To me, that keeps margins under a lot more pressure than we've been in 2021. You look at the American Foods Group plant that's in Warren County. That one likely comes on, I've been told, sometime about third quarter of 2024 if all moves forward. To me, all of a sudden, now we've got a lot more shackle space hanging out there. It's nothing but good for us from a producer standpoint when you realize we're likely going to look up here in a couple of years with a cow herd in this country that's roughly where it was in 2012. So I think as much as we've been so concerned about packer margins being too wide, and I get it, I truly get it, I think those packer margins are going to narrow a lot, and all of a sudden, I'm not sure I want to be in the packing business. But from a cattle pricing standpoint, everything that we're doing is nothing but positive to getting a larger share of whether we're talking the wholesale beef price or retail consumer prices back to farmers, back in that fed cattle price.
Can I follow up to that?
Yeah.
You mentioned about packing capacity. In the concern, a lot of the concern is that there are 4 people or 4 companies controlling it. Do we potentially run into a segment where we're bringing up these smaller entities and growing these mid-sized facilities that if we can't meet it and we see another downtick, that we're back to the same situation with the same amount of slaughter capacity, but now it's not as diversified as well?
Yeah, so potentially, all right, so I will say, you know, I do hear a lot, hey, the big 4 are control things. I will say all the time, I don't think those big 4 like each other very much. So despite there's only 4 of them, I think they'll fight if they see one of them somehow being more profitable than the others. All of a sudden, the remaining 3 will go bring that balance. For me as an economist, I keep saying there are very large economies of scale in meat packing, in cattle processing, and that's likely not going to go away. We want to be careful about saying we want to get rid of large packers, because with it comes the loss of economic efficiency. We have seen a lot of expansion in local cattle processing, local hog processing. I'm excited for those opportunities. To me, that's a different consumer market. So when I talk about smaller processors, I will say for them to market a premium local product is how they will make it go long term. Because, all right, we're all sitting here going, margins likely narrow, making everybody in the processing industry have a tougher period as we look ahead. So for small processors, again, I will say be focused on that consumer. How do you make sure that consumer stays with you, that is likely willing to pay a premium for a local product? So some of these mid-size, perhaps they help with some of our labor issues that we see in these plants today. I think we find some of the very largest plants who are usually located away from population centers, but near cattle, are having trouble running at 100% capacity. I'll hear some of them say, if I want to make a run on Saturday, I likely don't get a lot of folks to come back on Monday. They
Right.
want 2 days off. And I think those are some of the things where maybe a regional, so I look at the one in Warren County, closer to St. Louis. What's that really mean in terms of labor availability longer term?
I think we have time for maybe one more question. Anybody else? Yes. So the question was the port shutdown and cargo and export issues on the West Coast. And that's a question I didn't get to today, so I'm very glad you brought that up. Scott?
Yeah, so I think it's certainly been a problem in terms of trying to move more product out. I'll often say there is huge economic incentive to fix this problem of shipping bottlenecks more generally, but to how we move product to the rest of the world, because there's just so much, I think, money being made in terms of the cost of shipping, that I think folks will figure that out. So we see the Port of Los Angeles oftentimes as hey, we've got 70 days of backup or whatever the number is. I think some folks have figured out ways around using that particular port as a way out that might help us more here in the short term. The thing I'll say is when you look at what we're shipping to China, Japan, South Korea in terms of beef in particular, we haven't seen a cutback in what we've been shipping out generally on a weekly basis. We haven't lost the quantity. Now the question is, if we didn't have that bottleneck, would we be growing more quickly than we are? So I don't want to overstate, I think it's an issue. For me, it's much more now a problem of what can get in. So to our input price side of this equation, I think we continue to see inflation in a lot of costs.
I think that's our fire alarm.
That's right, that's our way to end.
That's our doorbell to tell us time is up. Scott, anything else?
I don't have anything else, Megan.
It's always great to see you, and especially great to see you in person and all of you as well. You can find us online at brownfieldagnews.com. You can also submit questions and comments for our weekly livestock market update, newsletter, which comes out every Saturday morning. Have a great weekend, everybody. I'm Megan Grebner for Brownfield.